Good morning, gang. Good morning. Welcome to this week's altcoin update. First and foremost, as usual, remember nothing discussed today is financial advice. It's for educational purposes only, and it's my view of the markets. Now that's out of the way, let's jump into today. So today we're going to recap on MONG and CAPO, and then due to popular request, we're going to look at RNDR and TOMO. So they're today's coins of choice. Obviously, if you guys want an altcoin covering next week, let us know down in the comments or leave a comment on our Twitter post that we always do on a Monday. So yeah, let's begin. Let's start off with MONG. It's actually been a pretty good coin in the end, as this. Not for up-only markets like everyone's hoping for, and everyone's bag holding, still massively underwater. But it's playing out so well. It's unreal. So obviously, initially we talked about this wick here. Coming up, this will be the resistance when they'll come in back down, basically backfilling this wick to create a range. If you did play along with what I said, then by the end of it you could have had nearly a 7-hour trade there, or if you played up to the EQ, you could have bagged yourself a 9-hour trade, which even if you'd have only bagged the first part of that trade, you'd have still outperformed any moron that's holding this massively underwater, who's still, even to the point where we are at now, you could be down 80% on your holdings. But yeah, so obviously since then we came outside of value into the range EQ, nice rejection off the range EQ, started change market structure back along the point of control, and now we're back down here. So again, it's been anyone that says that technical analysis doesn't work on mem coins, you probably just don't believe in technical analysis, full stop. But you get tradable ideas out of this. So what's happening right here? Well, where we are now, we can see, let's just remove this, shall we? And let's remove now some of these old squiggles because we don't need them anymore. Let's get rid of some of these. Right, so we're coming back down to range lows. So obviously we've just lost value. Let's drag this on a little bit further. And we've just lost value. And we're coming out. Obviously this is the 4-hour chart, so there's no reason why it can't get back into value here. And let's just draw on a quick squiggle so we can see where we are now. We're down at these lows here. So where we are right now, there's a couple of options that I'd be looking at here. First and foremost, if we turn around here and on a lower time frame, let's zoom down to something like the 15-minute, for example. If we start to change market structure here and start creating high, higher low, higher high, then it might be time to get involved. Okay, so we're back down towards range lows, and we might start getting a slight change in trend or in market structure, shall we say. Failing that, this isn't my favorite low down here, if I'm being honest. For me personally, what I prefer to see is come back down here and grab the liquidity once again. Just continue grabbing liquidity, but then you want to see some strength. So if you do get that liquidity grab followed by a sign of strength back into the range, and then hold that range there with a change of market structure, then you potentially got longs. And you just continue in the range. But what you've got to be careful of is, obviously we're making lower highs. Okay, so if we do start coming back up, you've got to then be conscious of another lower high potentially. Until it starts changing a higher time frame market structure like these, it's still in a downtrend. Okay, the whole thing, if you go into a higher time frame, it's still in a downtrend. Okay, so that's what I'll be looking at on MONG. Again, not something I'm interested in holding for a long term or anything like that, but quite clearly we can see it's playing the range beautifully, so trade the range until it breaks. The other one we looked at was CAPO. Again, another mem coin. This one, well, it's ranging, let's be honest. Let's just drag this along here. In fact, the last time we looked at this would have been back here, this squiggle, and all we've done is we've come back up towards value area high, back down into point of control, point of control, point of control, and we're just hovering around point of control. Again, it's very overcrowded in this region. You can see here where the volume is. Am I interested in trading this area here, just like back here? No, I'm not interested in trading this area here because it's 50-50. It's a 50-50 whether it goes that way or it goes that way. You've got no edge in this region at all. No edge. Okay? So what would I want to see with this? Well, quite simply, like I've said last time, is I either want to see come down and either A, eyes on the value area low, which would be a liquidity grab of this low and this low, change your market structure to the upside, and then you've got a long trigger. okay, then you'd be targeting point of control again, which we know is very overcrowded. So that'd be a sticky point. If it does get beyond that, then that'd be a take profit too. Okay, which in turn would be a liquidity grab of these highs. Okay, so if that does happen and you do get the liquidity grab of these highs first, let's say it goes up into this zone, change your market structure to the downside, you've got another short trigger. Okay, so until it gets outside of this value, there's no reason to look in either direction. Okay, you know, would I be looking for a value break and then longer breakout? Nope, won't be looking at that because it's not how I trade. Up there, I'd only be looking for shorts. Like down here or down here, I'd be looking for longs. Okay, because that's how you trade a range. Simple. Not interested in a breakout trade because a breakout trade often ends in a fake out. Okay, so very simple, level to level on CAPO. Right, RNDR. Now, this is one that I'm actively trading. We're actively trading in the group. So we had a really nice push up over the weekend. If we just have a look here, we'll do it was just before the weekend, I think. What was it? What day was it? Sunday, yeah, over the weekend. Really nice push up. Really decent rejection here, which was good. Short trigger. And where did we reject from? Well, depending on what your trading style is, effectively, we had a nice monthly level here. Or if you're the supply and demand style trader, you know, you had a supply zone right here. Okay, either way, good rejection, good entry for a short. Obviously, take profit one's already done, and now we're just waiting to see what direction the market wants to give us. So what can we expect next? Well, if it continues up higher, okay, if we get outside of this area here, then first and foremost, what we've got to be conscious of is we've got to be conscious of the liquidity that we've got right here. So we do have liquidity here. We've got stop losses. Okay, how do we know we've got stop losses here? Well, we can see here it's a key pivot. Now this is looking on the daily time frame. So therefore, we know we're going to have stops above these two highs. Okay. So if we do push up, run these stops, then change market structure. Again, it's all about patience. It's not about just aping in and shorting. If it comes into this region and just shorting and hoping for the best, you want to see something on a lower time frame. You want to see that change of structure. If you get that change of structure, then short it down. Okay. If not, if it continues to run higher, then again, you've got more liquidity at this zone here. Okay. This is what we're doing. We're looking for liquidity now because we're starting to form this decent uptrend. Okay. And it's still in an uptrend. Even though I have shorted this, it's still in a higher time frame. It's in an uptrend. Okay. And it could continue in that uptrend. Absolutely fine, you know. So until we do see some sort of high time frame change, then shorts are against the trend. Don't forget that. Okay. That's why we're locking in take profit ones early. Right. Let's in fact, we'll leave it on the daily. Now, what happens if this starts to break down? Well, if this starts to break down, let's obviously about a range on this. Let's use these to here. Lovely range. Look at this. Okay. So this is where we are here. So if this just starts to break down, first and foremost, we want to see, do we get a reaction back here? Do we get a retest? Now, bear in mind, this has been support, broke through, retested as resistance. Okay. Come down. We've got an EQ. Resistance, broke through, and now we're here. All right. So we've got a lot of taps on this level. So it's a key level. It's a key level. You don't need to be a rocket scientist to figure that out. So if we do come back down here, do we get a good reaction to the upside? Change your market structure, continue the uptrend again, then targeting the liquidity above these zones. Okay. Do we get that? Yes or no? If yes, great. Take the long. If not, we get no reaction here, and it gets accepted back into this, then we're back to trading this old range. Now, if we get back into this old range, let's throw on a volume profile. So here, and we see all the volume is down here. Okay, so we do have some volume within this zone here, some volume, but if that volume does not hold, then I'll be looking to come back down at least between the EQ and this value area high. Then you got to see what reaction you get there. Okay, so if this does drop, then it could drop rather harsh if it gets back into the old range. Okay, there is still structure. Bear in mind, this is a daily. There is still some structure. I'm not saying there's no structure at all. This is a lot more constructive than coins that just go up, which then in turn just come straight back down. Okay, there is more structure with this coin. So give it credit. This is healthy price action. Okay. If it doesn't react here, then again, look to see if it gets back into value. If it gets back into value, then we're just trading value as its own separate range. Okay. Very simple level to level on this at the moment. Okay. So upside, look for liquidity. Downside, see if it gets a reaction at the old range highs. If no reaction, let it roll back into the old range, and then we're back to trading this old range. Okay. Very simple. Right. The next one, TOMO. So again, similar idea. Let's see where this stopped. Similar idea. Grab that. We grabbed that liquidity? No, we've not grabbed that liquidity. Okay. Right. So let's go back to the daily and let's take a look at this. Okay. So first and foremost, let's just have a see where we've stopped. Volume profile. Volume profile is this? Yeah, there we go. So we've come up, there we go, right, we can see this now. So within this, we've entered this old range here. And we can see here where we've come up to this value area high. Okay, so right now, the job for the bulls is quite simply to hold on to this range within this value. Okay, so right now, this is the range that bulls need to be watching. So we had a nice reaction here off this value area high. Now we've still got some stops just above it, so I'd be conscious of that. Another swipe up, take those stops, come back down into the range, and then you're back to trading this old range. Okay? If it goes higher than that, again, look at each one of the major highs. This is on a daily time frame. Look at each one of the major highs as a liquidity zone. Okay? Does it grab the liquidity in reverse? Does it then change market structure? Does it start turning bearish on a lower time frame? Yes, well then you got your opportunities to short. Okay? If not, let it run further. This is, I was tweeting about this yesterday, you know, knowing where you want to take a trade is very simple. It's very simple once you understand basic TA, but it's knowing when not to take a trade. That's the hard part. So if it comes up here, rather than automatically shorting, going, oh, it's grabbed that liquidity, it's triggered them stop losses, that's it, we're going straight down, rather than shorting straight away without waiting for some signs of reversal, i.e., again, I've talked about this many times before, looking for some sort of market structure break to the downside, low, lower high, lower low, there you go, you got your structure break, going back up, tag it, trade it down. Okay, that's what you're waiting for, and this is where people go wrong. People don't have the patience to wait for this. They don't have the patience. Okay, and then people get worried, you see, when this sort of thing happens, when you get that low, lower high, lower high, lower low, people want to just instantly short here. Okay, because they don't have the patience. They don't have the patience for a retest. Plus, they also get concerned that this might just drop like a stone, and therefore it doesn't come back up to give them their entry, because they're scared about missing out on a trade. Still FOMO is that. That's FOMO. Fear of missing out. Okay? If this happens, absolutely fine. Just leave it. Leave it. See if you get an opportunity to short lower down. New range to form. Okay? Leave it. Absolutely fine. Look for your next coin to short, or your next coin to long. Look for your next setup. Okay? It's only if it gives you that trigger to take a trade that you take it. Okay? And this is where people go wrong with patience. They just want to be in every single trade. They don't want to miss anything at all. Okay? Right. So that's that. Now, to the downside, if it maintains this range, we carry on trading this range. If it loses this range, okay, then we can look for lower down. Now, bear in mind, this is something that my guys in the group are aware of, is I'm not a fan of this kind of structure. Upwards accumulation. Okay? I don't like this. Or upwards consolidation. I don't like it when price does this. Because all this means is each one of these lows has stop losses. Stop loss. Stop loss. Stop loss. Stop loss. There's low time frame traders that have been trading this all the way up. And they've either been trailing the stops up, or they've been getting involved with this little trend and just placing the statutory stops, hard stops, below each one of these lows. Now, the problem when this happens, when you get this kind of structure, now you can see this on all time frames, okay? When you see this kind of price action, is if this does drop out of here, okay, if this does start to roll over and come back down here, then these can cause a cascade effect. Okay, trigger that stop, goes lower, trigger that stop, goes lower, trigger, 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 and it just plows straight through them. Okay, until you actually get into some area of support. Where would that support potentially be? Well, looking at this again, we're on the daily chart here. Likely be using that area. That's your bottom range. Okay. So this, if it did cascade through, could come all the way through back to the EQ. Okay. Now let's throw on some volume there so we're not trading blindly and we know what's going on in this zone. You can see here where all the volume is down here, but we do have a sticky zone right here. Now, out of curiosity, let's pull this all the way along. And let's see, yeah. So we can see we've got volume cluster here. And below that, that's where you're triggering the stops, and then you're getting into this thin zone here, which effectively is this area here. Okay? So it's something you've got to be aware of. So that's what I'll be looking at there. Okay? So for now, not bullish, not bearish. We are at resistance. We have had a good reaction at that resistance for now. Either another stab up, grab these highs, or continue trading this range. Lose this range, then it could be a sharp move back down to the other range. Okay? So that's it. Nice and easy on TOMO. Okay? If you want to learn how to trade like us and understand how we trade like this, then come over to our website, spitfiretraders.com. Links down in the description below. From here, you can get access into our free Discord. And then obviously, if you do want to take your trading to the next level and you want to get access to all our educational content, well over 100 hours within here, then first and foremost, have a look at our video library. And then consider our Join Us tab, where it'll cost you the grand old price of $59.95 Great British Pounds, or in USD terms, that's $75. You can pay with crypto. You just need to drop me a message in the Discord. I can sort that out for you. And you get access to all our educational material. You'll also get access to the private Discord, which includes my daily trading plans, which includes, for example, the trade on RNDR that we just looked at. Okay, Bitcoin, Forex, stocks, you name it, it's all in there. Yeah, and I say that's the grand old price of £60. So that'll do. If you want a coin covering, as we said at the start, then let us know down in the description. Make sure you hit that like button if you've enjoyed today's content. And if you're not subscribed, consider subscribing. All right, gang, as you were. Bye-bye.